the Model 3 with multiple tax credits is becoming a mass market vehicle, which is just an incredible thing to see. It around $25,000 if you live in states like California or even Colorado.
He also said that Tesla is an AI company. Can you believe that? An analyst going on TV and actually making sense? We have to take a look at this one.
You're bullish just in terms of what these tax credits, what it could do for demand. How big of a bump do you think we could potentially see?
Look, over the last, call it 5, 6 months, Tesla has seen some demand issues. They started cutting prices late last year.
It is crucial to point out that Tesla was not the only company that experienced slower sales. For example, BYD Seal, which was launched just in August in China, it had really strong sales in November and December, almost 16,000 per month, and now the sales are about half of that. That's with discounts. People get upset at Tesla that Tesla is discounting their vehicles, but Tesla is selling more vehicles, not less vehicles, when Tesla chooses to discount them.
6 price cuts until recently, where they seem to have stabilized that a little with some marginal price increases recently. And this is happening globally, whether it's the US, Europe, China. We've seen general demand weakness in auto and in EVs and in Tesla specifically. It showed up not so much in their unit numbers last quarter, but in their margins, right? The margins dipped below this magic sort of 20% on the growth side that they had talked about and guided to. What this tax credit does is it helps not only stabilize demand, but potentially increase it over the course of the year. They've guided for 1.8 million vehicles. And I think that most people expect them to sort of kind of hit that. But where could help them quite a bit is in their margins, because they could get to this target without having to cut prices further, because frankly, the federal government is helping them do that.
Tesla does not need any of this help, but will sure take it. These incentives from the government, I don't see them as much as the government trying to help with the climate and stuff like that. I see it more as the US fighting against China. Because if all of these manufacturers make everything in China, then the US is a little bit in a tough spot if the relations between the US and China keep deteriorating. There is, of course, a climate element in these credits as well, but Tesla doesn't really need these because EVs just make so much more sense economically, but these credits do help to accelerate the transition to sustainable energy. That's for sure. But it would have happened anyway, just not as fast.
And if you think about what it costs to buy a Model 3 in the United States, they're getting a $7,500 tax credit if you meet certain income requirements, which makes these comparable in some states that offer additional tax credits to a Toyota Camry.
That is not even because electric vehicles generally require less maintenance and are cheaper to run, and electricity costs less than gas. This is just because of the incentives that are being offered. And some people are not aware of that. For example, I saw this tweet: people don't understand that Tesla cars are very cheap. Now, my coworker just spent $30,000 on a Mazda CX-30. He didn't know he could get a Model 3 for the same price after the $7,500 credit and a $2,000 New York State tax credit. This is one of the biggest hurdles for Tesla right now, says Charlie. Would you rather have this or this for the same price? I don't see it as a hurdle at all. What I see is an opportunity because many people don't know about this yet.
So really, the Model 3 with multiple tax credits is becoming a mass market vehicle, which is just an incredible thing to see. It around $25,000 if you live in states like California or even Colorado.
Yeah, George, I was adding up those tax credits today as somebody who lives in California. It is a huge discount when you think about it. But Tesla's not the only car maker, at least in the EV space, that is getting that kind of sort of double credit, right? That the federal tax credit as well as whatever the states are offering. How do you think Tesla competes in that environment when things are becoming increasingly crowded in the space?
Look, Tesla has a lead in EVs, a very strong lead, particularly on the mass market side, and they can make money at those price levels.
It appears that Tesla is still the only company that makes EVs and makes money from these alone without having to make plug-in hybrids or gasoline-powered vehicles. Some say that BYD is making profits, but are they really making profits from their BEV business? They don't tell us how much profit they make specifically just from EVs, and I think that's because they are not making any.
I mean, look, we cover a company called Rivian that's a competitor, but they have a niche product, a very, very good product with a high-end SUV and truck. Those don't qualify for these tax credits, but this is a completely different marketplace. And the GMs, the Fords, we don't cover them, but at this particular price point, it becomes very hard for them to make money in this $20,000 to $30,000 range for EVs. Tesla can do it.
Not only can Tesla do it, Tesla will do it. There's a big difference because GM, Ford, and Mercedes, and all of these other legacy automakers, Toyota including, they were able to make EVs 15 years ago. They just chose not to. With Tesla, that's not going to be the case.
And it's really their ability to have full vertical integration that's allowed them to do that. They make battery cells. They even mine and process materials. They have this autonomous driving software called FSD that can add to margins. I mean, the way we think about their business, it's razor blade, meaning that they sell these vehicles at a 20-ish% gross margin, and they hope to penetrate and get additional high gross margin software sales over time through adding on full self-driving. Now, right now it's priced at $15,000 for that option. We think it's very, very compelling, but it's getting a lot more expensive, particularly relative to the price of the car that seems to be going down in price, either through Tesla's works or through federal tax credits. So we're advocating for a price cut for FSD from $15,000 maybe to the $10,000 range. But that really helps their margins over the long term.
Can you imagine an analyst going on TV and saying that full self-driving is going to be essential for Tesla's future, and this is why Tesla is going to be so successful? Well, if you didn't, we just saw it happen. Although I'm not sure if I agree with him that Tesla should lower the price of full self-driving. I think what Tesla could do is lower the price of a subscription, maybe from $200 to $100, and then as it gets better, just simply increase the price. Because if you sell the full self-driving package right now, sure, you're getting some profits at this moment, but you're sacrificing bigger profits later. But we can certainly have a debate here.
George, when it talks about the potential here of FSD, there was talk earlier this week, Elon Musk saying that he would be open to licensing the technology. Of course, there was also the partnership with Ford last week for its charging network. Do you think that's a smart move here going forward for Tesla, just in terms of licensing some of the technology that they have already perfected at this point?
Look, it could be. We'll have to figure out how that works and what kind of price they offer. We actually initiated today on 2 companies in autonomous driving. We called our report AI for the streets because ultimately these are AI companies, right? Not only is Tesla an AI company.
An analyst saying that Tesla is an AI company. Can you believe that? And he is not an Ark Invest analyst. If he sticks with his Tesla stock rating, his tip ranks profile eventually will look pretty good. He's not having much luck with other companies, but with Tesla, he's doing all right. Even though only 3 out of 7 ratings for Tesla stock were profitable, his average return for Tesla stock already has been over 18% per rating, so not bad.
But a company like Mobileye, who initiated on, or Aurora, these are really, really interesting stories that create a product that has a lot of AI embedded in it. So if companies really want to move forward and have strong autonomous offerings, they have a couple options. And on the passenger side, right, today, they could potentially do something with Tesla. We'll see how that works out. They could also use something from Mobileye, and over the long term, maybe even something from Aurora. So they'll have multiple options. But on the passenger vehicle side specifically, we think Tesla is in a very, very strong position, as is Mobileye.
And this is where I started to disagree a little bit. We know that to make AI work, the most important thing by far is to have the most amount of data. And Tesla does have the most amount of data by far. So I would tend to agree with Elon Musk that I couldn't see the second place even with a telescope.
You talk about the vertical integration that has really been key to Tesla's success. And, I'm thinking too, as a driver, the benefit of having something like a Tesla is the infrastructure that is already in place for those Tesla drivers. As we see more and more offerings within the EV space, how much of that becomes a real advantage to Tesla? I mean, it already has been, but now that we're talking about affordability for the car, to what extent does that become an additional lever, additional reason for drivers to say, look, this is why I'm going with Tesla?
So what we've seen so far is that through vertical integration, Tesla has been able to offer vehicles at a low price and still make money on them. What we'll see in the future, and what we're seeing from a company like Rivian, for example, is that what vertical integration does is it allows features to be downloaded over the air. And it sounds like it's easy, right? We all have it on our smartphones, for example. But in order to enable real over-the-air features, like something Rivian offers called camp mode, where it literally changes the suspension of your vehicle, you have to be able to write software at a system level. You have to be able to write the braking software, the motor software, and all this stuff that today a company like Ford, for example, buys from hundreds of independent vendors. As a matter of fact, there was a recent interview with Ford's CEO where he described this very phenomenon.
They do it, by the way, to save just a few $100s per car. And while it looks on the surface that they are saving money, if you experience any kind of serious supply chain shocks, you're not saving anything because you're not being able to produce enough vehicles. And when you have a recall, you can't just send an over-the-air update. You have to physically take in the cars, and that costs money. I actually had to do that with a Mercedes that I used to have. An over-the-air software update that was supposed to be done over the air was done through a dealership, and they had to plug in their computer or whatever, scan it for a few hours, and then the car updated eventually.
These companies have to be built up from the ground and have to embed a Silicon Valley a software type infrastructure and culture that's really hard to do when you're re-engineering your company. And companies like Tesla and even like Rivian have done that from the ground up. They started with a clean sheet of paper. And so that kind of that DNA allows you not only to have low prices, but also really great feature sets.
So does Rivian present the biggest threat to Tesla? I mean, clearly we've established that you're very bullish on Tesla. What is that one car maker that you think could really offer or could present the biggest threat?
I think we don't cover them, okay, but I think that over the long term, and we've written this in our reports, the market will be Tesla and maybe a couple other OEMs on the traditional side. We think Rivian has a very, very good chance. But it's the Chinese OEMs that present a global threat to Tesla's dominance. And it's the same way the smartphone market has worked out. We have Apple, and we have a lot of very successful Chinese vendors. So, and maybe Samsung too. And that we see the EV market really structuring itself long-term in a very similar fashion to the smartphone market.
I generally agree with his view. As long as the West gets along with China, the biggest competitors are going to come out from China. But you may not see them in the US for a long time because the tariffs are very high for these companies to export their vehicles from China to the US. So they would have to build a factory outside of China for them to be able to sell their cars within the US. And in this video, I talk about Tesla starting to advertise. My name is Matt Post. Just like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.